Next week is going to be absolutely massive for your portfolio. We're either going to see this price absolutely hike up within the US market, or we're going to see this drop significantly. Currently, markets definitely look to be overvalued and overbought, but does that mean momentum is going to slow next week? Let's try and find out. Well, starting off with last week, we've seen CPI drop, and we have actually seen a 2.3% increase from the month before, which is obviously really, really good for the US economy. So it's clear to see that last week the macros were definitely on the side of the US economy, and we have seen that reflected in the price here. We have seen the US economy do really well. We are well into a long position now, and on a basic week here, we are up almost approximately 3.45% in the US markets. So is this momentum going to carry through? Well, according to the indicators here, we are well above the exponential moving averages. So we do have a lot of pressure pushing the US market up, and we are coming back up now to where we were previously before the decline, with the tariffs basically pushing this down. So it does look to be very bullish, but I am very skeptical. But in this video, we're going to be going over some of your favorite stocks. We're going to be looking at stocks with a lot of momentum at the moment, and we're going to be assessing the sustainability of these to see if they are actually good stocks to be momentum trading next week. So for next week on a macro scale, what do you need to look out for? Well, there is the FOMC minutes, which is a Federal Open Market Committee. There is the Jobless report, which is essentially for unemployment. And there is the retail sales for the US market as well, which will indicate another. It's basically another way of looking at CPI to see how people are actually spending with the fears of tariffs basically looming over their head. But currently, based off of CPI, it does look to be as if, and the market as a whole, it does look to be as if US, what's the word I'm looking for here? People, there's definitely a better word for that, but I can't think of it right now. But people within the US, residents, whatever, they are very bullish at the moment, especially when the US is actually making moves with their talks within the Middle East, and actually with China, which is absolutely huge. It's fair to say that people are starting to pick back up on their investing and their portfolios as a whole. So it's definitely a bullish time to be buying right now. And based off of my indicator, I've never seen so many stocks here break out with a breakout score, which indicates to me actually that I do need to refine the equation for this, essentially to make it a bit more bearish in a way, because there is a lot here that are breaking out, and I don't like that, especially when you've got stocks here with a PE of 178. Yes, they might be breaking out, but they don't actually look that sustainable at all. So something I need to work on, and I will be working on that in the coming days, but I'm rambling now, so let's just carry on with what stocks could be breaking out next week. But before we get on to next week's stocks, let's just quickly go over some of the key sectors where the momentum is building up, and that is for sure energy. For example, KEG, Constellation Energy. KEG is the ticker. We've seen a lot of momentum build up in this stock as oil prices are rising. There's just a lot of money pouring into this market at the moment. There is tech, which is obviously still massively hot, especially with names like Nvidia, AMD. They've seen massive amounts of money pouring into them, especially because the US have announced that they are going to be selling a lot of their chips within the Middle East, which is absolutely huge for Nvidia. There is financial companies like JP Morgan, SoFi, New, Robinhood. They all did absolutely outstanding last week, but I think most of these companies are very undervalued in my opinion, so they could be a potential good place to put your money. And of course, healthcare. We've seen stocks like Hims and Hers absolutely rally last week, but they are now starting to fall off. And on the case of Hims and Hers, we have actually seen a lot of short interest in Hims and Hers, which is very interesting. On my system here, I have a intrinsic value set for Hims and Hers. I've recently just redone this, and I have actually upgraded it. So I've gone from $66 to a downgrade of $43 to an upgrade of $72 on the high side, and my own formula has yielded a result of $77 for Hims and Hers. So that could indicate that there could potentially still be a bit of room for a bullish run for Hims and Hers based off of my indicators, but we are obviously seeing a lot of short selling pressures. I'm not going to pull it up here because that means I've got to open another tab and find it, but it was around 40%, which is kind of outrageous. I do think this price for Hims is justified. I know in the last week's video I was a bit questionable on it, but I have now done another analysis, and I think it's fair to say that they are fairly valued, if not still a bit slightly undervalued at this price, especially when you include normalized distribution, probability of a positive day, their valuation, their growth rate, their revenue, their liquidity ratio, their free cash flow. This company just looks incredible. So Hims and Hers is one in which I do expect to see a lot of momentum, and they are actually topping out my momentum score at the moment. As you can see here, ignoring the number one, we can see Hims and Hers that they yield a result of nearly 50, which is really quite outrageous. Another thing to watch within the US market is the earnings for the Q1, of course. They were expected to be at around, I believe it was 10.6% in January when people were making the estimates, but they have fallen down to approximately 6.1%, which is actually why I'm quite concerned for the US market, as when you do look at a Schiller's PE here, we can see that we are seeing results currently of 36.36, which is just massively overvalued when you look at a historic basis of Schiller's PE. I mean, 2022 here, we saw the massive sell-off, the correction in the market. So I think it's fair to say that being at 36 is not a sustainable place to be, and when the markets keep rallying, I am a bit concerned about this. But I have said in previous videos, I think it's fair to say that investing is not quite what it used to be. People are now just pouring money into the market because it's so easy. It's an app on your phone, you buy and you forget about it. All you see is some guy on TikTok say, oh, buy the S&P every year and you'll be a millionaire when you retire, and people do just do that. They don't really know what they're putting their money into. It's not necessarily a bad thing because you can make money off of it, but it is definitely a key reason as to why I think the markets look massively overvalued currently. And going back to the energy sector here, Constellation Energy has seen a massive price hike. It's up around about 81% since its bottom here, and it's just continuing to have a lot of momentum. They are ranked relatively high. They're 9th on my breakout indicator, and you can see here, apart from the volume, they look to be in a relatively strong place. So it's fair to say that they are a brilliant company to be buying right now, but I'm not a financial advisor. So previously, they've had their Q1 earnings announcement, and they had an adjusted operating earnings in Q1 of a $12.14 per share, which is an increase of 18% from the previous year, despite slightly missing analyst estimates of 2.18. So it's 2.14, which the estimate is 2.18. They've seen a significant revenue growth. The company achieved a 10% year-over-year revenue increase, totaling $6.79 billion, and the full-year guidance for Constellation Energy reaffirmed that it's going to be a guidance of around $8.9 to $9.6 per share, aligning with market estimates, which is really good. There is a lot of anticipation of long-term nuclear energy contracts. The CEO, Joe, I'm not going to bother to try and pronounce his surname, announced that Constellation is close to finalizing long-term agreements to supply nuclear energy within the United States. These contracts are expected to provide revenue stability, and they cater to the growing electrical needs within the US, especially around AI-driven technology. So it's fair to say that this looks to be a good long-term play, and especially when you see the momentum at this current stage, it's fair to say that this stock looks to be a very good buy at these levels. And as for Constellation Energy, I have a bullish intrinsic value set at $491 and a bearish set at $279. I do not have a discounted free cash flow analysis, and I don't have my own formula for this because I only made that formula about a week ago, and their free cash flow is actually something which you should look into. It's not particularly great, but they are going through a lot of development at the moment. But this does look to be a good buy, but I don't want to just make this video about keg, so let's move on. So now looking at Supermicro, this is a stock in which I also have to be massively undervalued, and they are ranking really high on my breakout score. So I have this looks broken to me for some reason, but they have an intrinsic value on the bullish side to be set at $89 currently, and I recently upgraded them, and a low side to be set at all the way down at 100, which is still massively above where we currently are. This stock is currently priced in at $46, and their PE ratio, I think, let's just have a quick look when it decides to load. It's all the way down below 20 from memory. It's actually 25 now, but obviously I haven't looked at this since it's broken out. So it does have a lot of momentum behind this. And what is the reason for this? Well, on May 16th, Supermicro announced a strategic partnership with Data Vault to develop hyperscale a hyperscale AI campus within Saudi Arabia, which is obviously after the talks with the US and the Middle East. So it does look to be as if it's breaking out for good reason, and I think this could be the catalyst in which it needed to really bring it to the people's attention as to why this stock looks massively undervalued. So I do think this could be a great buy-in, but there is of course a lot of risks with associated within Supermicro. But it is above all of their exponential moving averages, and on a MACD indicator, they have just entered into a long position. Of course, I mean, this is to be expected when you're looking at stocks climbing up with such momentum. I think they are up approximately 53% on the week. That could be a bit wrong, but they have had a lot of momentum, and they are still way below their all-time high. Well, it's not their all-time high, but their recent high within late February. So it does look to be a stock that has a lot of chance. A big chance to climb up quite quickly next week, but of course it could also come falling down very quickly. Okay, so I don't want to ramble on in this video for too long, because when I make it too long, people don't watch it all the way through and it hurts the click-through rate. So let's just wrap this up on a broad market condition. Let's summarize it. So markets held strong last week despite some midweek turbulence. If you're wondering why I'm looking over there, it's because I got a script. I can't wrap this off the dome. Investors digested a cooler than expected CPI report, reinforcing the idea that the Fed may pause or even cut rates later this year, which they have already indicated on. They indicated that they might cut them late summer, which will be absolutely massive for the US economy, especially for the fintech stocks. As I'm not going to go into it, but it will be absolutely huge for the US markets. So it's very bullish for equities, especially tech as well. So what should you be looking out for next week? I'm losing my voice now as we go on, but next week you should be continuing to look out for AI names and rate sensitive sectors, as these will see a lot of volatility next week. It might be good, it might be bad. In my head, I think they should definitely go down, but I think they might actually see a bit of momentum. Of course, we saw a lot of bullish momentum earlier on in the week, and now as the week's coming to a close, especially within midweek, we've seen a lot of selling pressure. It's like a yo-yo effect, essentially, as someone commented earlier, which is on one of my other videos, which is really accurate, of course. But keep an eye out on these earning reports, especially within big AI names, and look out for the Fed data dependent. Every macro release is a potential market mover. So, of course, we have the Federal Open Market Committee coming out next week, which will be huge. But I do think it's fair to say that I expect the market next week to be bullish. Of course, do expect a lot of volatility. This is not financial advice, but the indicators do indicate that it's going to be a bullish week. We're going to see momentum carry through from this week into the next, and we're going to see a lot of these big names basically get bought back up as people try and take money off of each other. But I do definitely think, especially when you look at indicators like Schiller's PE, markets are massively overvalued right now. So please do keep that in mind when you're putting money in, because there is a high potential that this could come falling down very quickly, very fast, very unexpected. So please do keep that in mind. Dollar cost average, do it the safest way you possibly can. Don't just gamble your money away. It's going to be quite a volatile week, but in my mind it should be bullish. So with that being said, I hope you have enjoyed this video. This has been a bit shorter than normal for my weekly report, as it is currently Friday evening as of recording this, and I am going out for a few drinks, and I've already had a few, to be perfectly honest with you. That's why I feel like this video is probably not as good as it normally would be, but I hope you have enjoyed this video and found it somewhat useful. I've displayed here a few momentum stocks in which could be great for buying next week, but again, very volatile, so do keep that in mind. With that being said, again, I've said this about 5 times. I hope you have enjoyed this video, and I'll see you for the next video. I said video way too many times there.